Hey everyone, and today we are going to talk about two interesting companies that are quietly making big moves in their industries. So the first one is a hotel subsidiary which has just secured a 2.2-acre land parcel in Nehru Place, New Delhi to build a 500 plus room 5-star Aurika property. And the second company is a packaging manufacturer which has reported a turnaround quarter where its revenue grew 34% year on year and EBITDA more than doubled. Both the companies are expanding their footprints, one in the high-end hospitality and the other one in the global packaging markets, while building stronger growth visibility. So welcome to another episode of Noisemaker, where we keep things simple and talk about companies that may not always come in the spotlight but have a strong potential for the future. I'm Saizal Agarwal, Equity Research Analyst at Desvelado Advisory. And today we'll be talking about two companies that are making solid progress in their business, and if current trends continue, they might keep growing even further. But before that, here is a quick disclaimer. So any discussion, facts or writings provided here are for informational purposes only and do not constitute any buy or sell recommendation. So please conduct your own due diligence before making any investment decision. Now let's move to the first company, which is Lemon Tree Hotels Ltd, India's largest mid-price and the third largest overall hotel chain. So their subsidiary Fleur Hotels has recently secured a 2.2-acre land parcel in Nehru Place, New Delhi to build a 500 plus room Aurika hotel, which will be one of the largest in the city. And this move strengthens their upper upscale Aurika brand and will act as a flagship property, much like Aurika Mumbai. With 226 hotels and 18,430 rooms already in operation and plans to cross 20,000 rooms soon, Lemon Tree is clearly scaling fast. Now to take us through the financials and future growth drivers, Mudit will be joining in. So Mudit, how has the performance been lately?
It's quite strong, Serial. In FY25, the revenue jumped 20.1% year on year to 1,286.1 crores, while Q4 FY25, the revenue hit 378.5 crores, up 6.6 sequentially. On probability, EBITDA grew to 636.5 crores with margins holding at 49.5%. If we talk about the net profit, it surged 34% year on year to 243.1 crores, improving margins to 18.9% from 16.9%. And that shows that operating leverage and efficient cost management at play. Beyond the numbers, I would say the growth levers are interesting. They are renovating 4,300 plus rooms to boost ARRs by 15 to 19% and cut the renovation cost sharply by FY27. The key is hotel revamp. It's like 936 rooms with 45 to 50 crores capex, and it's expected to add 60 to 80 crores EBITDA annually. Plus, 50% of the owned hotels will shift to renewable energy within 18 months, lowering costs and supporting margins. So here's my question to you, Cecil. With such heavy investments, can Lemon Tree keep balancing growth and profitability at the same pace?
See, that's the critical part, Mudit, because they're targeting to be the net debt free within 18 months. And all thanks to Fleur's upcoming capital raise and strong cash flows. But at the same time, management fees from Fleur are expected to climb 100 plus crores in FY26, expected to 300 to 400 crores annually in the coming 3 years, creating a stable asset light, high margin revenue stream. But Mudit, with this balance sheet cleanup and growing management income, do you think the company is positioning itself more like a brand-led operator than just a hotel owner?
Exactly, Cecil. That's the transformation story here. Like by keeping the Fleur asset heavy and Lemon Tree asset light, they are splitting risk while ensuring scalable high return growth. And if it is executed well, then Lemon Tree could shift from being known as a mid-price hotel chain into a formidable upscale hospitality brand with stronger margins and a cleaner balance sheet.
Okay, thank you, Mudit. So now let's move to the second company, which is Kanpur Plastipack Ltd, a leading Indian manufacturer and exporter of FIBCs, PP yarn, and specialty fabrics. They supply to over 45 countries, with export making up to 70% of the revenue. And the company has more than 50 years of experience, produces over 10 million bags annually, and is also focusing on a sustainable operations powered by a 16.2 megawatt solar base. Recently, they delivered a strong Q1 FY26 with the revenue up by 34% year on year to 182.2 crores and EBITDA surging 119% year on year to 15.5 crores and PAT swinging to 5.7 crores profit versus a loss last year. Now, this turnaround came from solid export demand, repeat global orders, margin gains from a stronger USD, and a sharper focus on value-added products. Importantly, they also acquired 76.2% stake in UK-based Valix Venture for 8 crores rupees, giving them direct access to premium FIBC customers in the UK and EU. So, Mudit, with such a turnaround quarter and an international acquisition in place, how do you look at the financials for Kanpur Plastipack?
Okay, getting to that, they have shown, I would say, impressive improvements. Cecil. In FY25, the revenue grew 27.1% year on year to 628.6 crores compared to 494.7 crores in FY24. Driven by steady demand and volume expansion, the quarterly performance also reflected consistency. That is, like if we talk about Q4 FY25 revenue, it rose from 183.9 crores up 40.4% sequentially. On profitability thing, the EBITDA more than doubled to 45 crores with the margins improving to 7.2% from 4%, showing better cost efficiency. And if we talk about the net profit, then it also surged to 11.1 crores in FY25 compared to just 0.8 crores in FY24, with net margins up to 1.7%. So while margins are still modest compared to global peers, the trajectory is still improving. But here's my question to you, Cecil. With exports already forming 70% of the revenue, do you think their execution of Valix Ventures in the UK will be the real game changer for their growth?
I believe so, Mudit, because the Velix acquisition not only expands their presence in the UK EU markets but also gives them access to premium food grade and UN certified FIBC customers, which carry higher margins. Plus, the upcoming UK India FTA could further strengthen competitiveness in that region. Also, at the same time, the company is also planning expansions into Japan, Brazil, which will further diversify its customer base and reduce the reliance on existing geographies. And with advisory support from Grant Thornton, they are sharpening focus on a higher value product mix. But Mudit, what's interesting is that they're repurposing their vacated CPP facility to add fabric facility, which should boost FIBC production. So, do you see this pivot toward a scalable, value-added segments like FIBCs and specialty yarns as a sustainable growth driver?
Absolutely, Cecil. FIBCs are a high margin scalable business, and with the rising demand for bulk packaging in developed markets, I would say it's kind of a smart pivot by repurposing capacity and focusing on value added products. The Kanpur plastic pack is aligning itself with long term export opportunities. And if they actually select maintain their zero debt ambition, strengthen their global footprint, and capitalize on the currency advantage, the company is well placed to deliver sustainable export led growth with improving profitability in coming years.
Okay, thanks a lot, Mudit. That really helped us to understand the direction both these companies are moving in. Now, let's take a quick look at how some of our previous picks have performed. So first we have Vimta Labs Limited. We picked this up at 481.5 rupees and now it's at 665, giving a return of 38.1%. Jupiter Lifeline Hospitals Limited. We took it from 1,499 rupees to 1,444 rupees and that's a 3.7% decline. Late Revenues Technology Limited, we picked this up at 194 and it's now at 271.1, giving a return of 39.7%. MAS Financial Services Limited, it moved from 324 rupees to 306.9, delivering a minus 5.3% decline. And lastly, we have Elpec Solar Limited. This one also saw a rise from 1205 rupees to 1351, which is a 12.1% gain. So overall, a pretty good mix of gains, and we'll continue to monitor all these companies closely to see how they shape in the coming quarters. Now here is the QR through which you can access all these previous picks which we covered recently. Now let's move to the summary of today's company which we included in today's Noisemaker. Lemon Tree Hotels Limited, where the Fleur Hotels Ltd, the subsidiary of the company, has secured a 2.2 acre land parcel in Nehru Place, New Delhi through a Delhi Development Authority e-auction to build a 5-star Aurika hotel. Kanpur Plastipack Ltd, the company delivered a strong Q1 FY26 with revenue rising 34% year-on-year to Rs 182.2 crores, EBITDA surging 119% year-on-year to 15.5 crores with a 370 basis points margin expansion to 8.5%. And that's all for today's edition of Noisemaker. And if you found this breakout informative, you can scan the QR code to read the full report, and we'll be back soon with more simple and clear market updates. Until then, stay curious, stay ahead, and stay informed.